The foreign exchange market, or forex, is where currencies are traded. Imagine it like a massive global marketplace operating 24 hours a day, 5 days a week. In this market, individuals, businesses, and even countries buy and sell currencies to facilitate international trade and investment. For instance, if someone in the United States wants to buy goods from Europe, they need to exchange their US dollars for euros. Forex trading involves profiting from the fluctuations in exchange rates. Traders aim to buy a currency when its value is low and sell it when its value rises. It's a bit like buying a stock low and selling it high. However, forex trading carries significant risk, as exchange rates can be volatile and unpredictable. Muslims looking to participate in the forex market need to ensure their trading activities align with Islamic principles. This requires a deep understanding of both forex trading mechanics and Islamic financial jurisprudence. Islamic finance emphasizes ethical and moral conduct in all financial dealings. Several key principles guide Muslims in earning and managing wealth. One of the most fundamental principles is the prohibition of riba, which refers to any form of interest or usury. Islam considers interest exploitative and unjust. Another crucial principle is the prohibition of gharar, which translates to excessive uncertainty or speculation. Islam encourages transparency and fairness in transactions, discouraging activities that involve excessive risk or gambling. Furthermore, Islam emphasizes the importance of halal, or permissible earnings, meaning that wealth should be acquired through ethical means and not involve anything forbidden by Islamic law. These core principles form the foundation upon which Muslims must evaluate the permissibility of forex trading. Proponents of halal forex trading argue that it can be permissible if certain conditions are met. They emphasize that forex trading, in its purest form, involves the exchange of currencies for legitimate purposes, such as facilitating international trade or investment. For example, a Muslim-owned business importing goods from another country needs to exchange currencies to complete the transaction. This type of forex trading, directly related to real economic activity, is generally considered permissible. Furthermore, some Islamic scholars argue that spot trading in forex, where currencies are bought and sold for immediate delivery, can be halal. This is because spot trading doesn't involve any interest or uncertainty regarding the underlying asset. The transaction is completed on the spot, eliminating the element of riba. However, even those who consider forex trading potentially halal emphasize the importance of adhering to Islamic principles. Despite arguments for its permissibility, several concerns make forex trading potentially haram. One primary concern revolves around the widespread use of margin trading and leverage in forex. Margin trading allows traders to enter into larger positions with a small amount of capital, amplifying both profits and losses. This element of leverage introduces significant uncertainty and risk, potentially leading to excessive speculation, or gharar, which Islam prohibits. Another concern is the potential for riba in forex trading. While spot trading itself might be free from interest, many forex brokers offer margin trading facilities that involve interest charges on borrowed funds. If a trader uses these margin facilities, they could be engaging in riba, which is strictly forbidden in Islam. Finally, some Islamic scholars argue that forex trading in its current form has deviated from its original purpose. They argue that excessive speculation and a focus on short-term profits have made forex trading akin to gambling, which is prohibited in Islam. Section 5. Navigating the gray areas, interest, or riba, and speculation, or gharar. The permissibility of forex trading hinges on navigating the gray areas of riba and gharar. The use of interest-bearing margin accounts is a clear violation of the prohibition of riba. Muslims must avoid any form of interest in their forex trading activities. This requires carefully choosing Islamic forex brokers who offer swap-free accounts that don't involve any interest charges. Similarly, excessive speculation goes against the principle of avoiding gharar. While profiting from currency fluctuations is not inherently haram, engaging in risky trading strategies that involve excessive leverage and uncertainty is problematic. Muslims are advised to approach forex trading with a long-term investment perspective, focusing on fundamental analysis and risk management rather than short-term speculation. Carefully analyzing and addressing these concerns is crucial to ensuring that forex trading aligns with Islamic principles. Section 6. Scholarly opinions on forex trading. The Islamic scholarly community holds diverse opinions on the permissibility of forex trading. Some scholars, particularly those from the more traditional schools of thought, tend to prohibit forex trading outright. They cite concerns related to riba, gharar, and the speculative nature of the market as reasons for their stance. Conversely, some contemporary scholars argue that forex trading can be permissible if certain conditions are met. They emphasize the importance of avoiding interest-based transactions, excessive leverage, and speculative trading strategies. They argue that forex trading, when conducted ethically and responsibly, can be a legitimate means of earning a halal income. This difference in opinions highlights the complexity of the issue and the need for further research and discussion within the Islamic scholarly community. Section 7. Practical considerations for Muslim forex traders. Muslim traders considering participating in the forex market must take practical steps to ensure their trading activities are permissible. Choosing an Islamic forex broker is crucial. Islamic forex brokers offer swap-free trading accounts, eliminating the issue of riba. Traders should focus on trading strategies that align with Islamic principles. This includes avoiding excessive leverage and speculation, focusing on long-term investments, and engaging in thorough due diligence before entering any trade. Furthermore, seeking knowledge from reputable Islamic scholars well-versed in Islamic finance is highly recommended. Section 8. Seeking knowledge and guidance. The permissibility of forex trading is a complex issue with no easy answers. Muslims must approach this matter with caution and diligence, seeking guidance from both Islamic scholars and financial experts. Consulting with a knowledgeable Islamic scholar who understands the intricacies of Islamic finance and can provide personalized advice based on individual circumstances is essential. Furthermore, it is crucial to remember that Islam emphasizes the importance of seeking halal earnings and avoiding anything doubtful. If a Muslim has any doubts about the permissibility of their forex trading activities, it is always best to err on the side of caution and abstain. Ultimately, the decision of whether or not to engage in forex trading rests with the individual. Section 9. Conclusion. A matter of conscience. The question of whether forex trading is halal or haram is complex. There are valid arguments on both sides. Ultimately, it is a matter of individual conscience. Each person must weigh the evidence, consider their risk tolerance, and make a decision based on their understanding of Islamic principles. However, this decision should not be taken lightly. It requires careful study, consultation with knowledgeable scholars, and a commitment to ethical conduct. Forex trading can be a legitimate means of earning a living, but it is not without its risks. By approaching this matter with caution and seeking guidance, Muslims can navigate the complexities of forex trading while upholding the principles of their faith.